In the last video, we identified the weak points of retail traders through liquidity zones, and we learned how market makers use this to move the market. In this video, we'll look at how to find actual entry points based on the information we gathered last time. First, market makers must buy and sell volume in key zones for delta hedging. If you don't know what delta hedging is, please watch my previous video or use AI tools like ChatGPT or Gemini to find out. Moving on, their volume usually consists of massive orders, so if they submit them without filtering, they could be counter-tracked or fail to fill the desired volume at the target price. They must move to find points with enough liquidity to absorb these huge orders, and it's only here that the orders of major players are filled. If we can just figure out where they're headed, we can follow their movements. Let me show you an example from the past. On November 20th last year, I told my subscribers about Bitcoin option volumes identified where market makers would hedge and posted the reversal point from bearish to bullish. Looking at the chart right now, as soon as the downtrend reached the significant dealer zone, algorithmic buying triggered a sharp rally, moving the price toward the market's intended destination. Knowing the destination in advance is incredibly powerful information, so it's essential to understand this. Now, here's the core of this video. Even if you know the destination, if you don't know where the reaction will occur, you only understand half the rules. Once you've found the destination via liquidity zones and seen the hedge zones through options, the final piece is tether. To be precise, tether dominance is what pulls the trigger in this game. Market maker hedge zones don't automatically activate just because the price reaches a certain level. They need a reason to hedge before they'll actively participate and move the market. So you need to know the triggering factor, and that trigger is tether dominance. Since tether dominance and Bitcoin move inversely, tether must drop for Bitcoin to rise. In the opposite case, Bitcoin will fall. Let's look at the data we just predicted again. On November 20th, Bitcoin was in a downtrend. Let's look at tether dominance on that same day. Tether dominance reached the top of the channel and is losing momentum, forming a bearish candle. After that, it fails to extend further and returns to the lower channel area. The date it returned to the lower channel was around 6 a.m. on November 25th. Looking at Bitcoin for that same period, 6 a.m. on the 25th was the absolute bottom and also the market maker hedge zone. We need to take notice here. Since Tether's dropping into the market maker hedge zone, capital is shifting to Bitcoin, showing us that a price reversal is likely very soon. The market maker waiting in the hedge zone and Tether's downward signal are the reversal signals for Bitcoin. Once you've mastered this method, you won't have to sit in front of a computer all day just to trade. Just mark the price where the reaction will happen and wait, that's all. Now, in the next video, I'll show you how to identify the zones where the main trends start. Thank you.